All right. Well, everyone, hello and welcome. I'm Mark Torlucci, Client Success and Project Manager for our industry roundtables here at the Financial Health Network. We are happy to bring you another roundtable in our 2024 benefits as an exclusive member benefit, and I'm really excited about today's session. As you may know, at the Financial Health Network, we're dedicated to supporting responsible innovation that drives financial health. And today, we're excited to share an initiative that truly embodies the mission. Our longtime partner, Discover Bank, has recently committed $36 million to launch a mission-driven investment fund to empower innovators focused on improving financial health for underserved consumers, communities, and small businesses. This fund, created in collaboration with Chartline Capital and Resilience VC, has already supported 10 companies, and today we're thrilled to showcase their innovative solutions. With that, I'm going to go ahead and turn over to my colleague, MK Falgu, who will kick us off for today's event. MK, take it away.
Thanks, Mark. Hey, everybody. My name is MK Falgu, and I am a program manager on the Financial Services Solutions team here at the Financial Health Network, where I get to work with financial institutions of all sizes to advance solutions that will improve the financial health of their customers and communities. And on the Discover Financial Health Improvement Fund, I, along with my FHN colleagues, get to evaluate the financial health impact of new companies when the fund is looking to make a new investment, as well as evaluating the ongoing financial health impact of our portfolio companies. I'm very excited to have so many financial health champions in the room today, both from our membership as well as from our portfolio, and hoping that this can really be an opportunity for us all to get together and spur new and creative ways to advance financial health in a collaborative way. So we are going to start with company presentations from 3 of our portfolio companies today. We're going to hear what it is they do, how they do it, and how it is advancing financial health. We're then going to have a panel discussion about partnerships with fintechs, between fintechs and large corporations, what that can look like, what works, and what partnership might look like going forward between our members as well as our portfolio companies. And then we'll have plenty of time for Q&A throughout the program. So if you have questions along the way, feel free to drop them in the chat, and we will address them as we go, and we'll also open up the floor to just come off mute and have conversation throughout. So cool, let's get started. Yep, and as I mentioned, the 2 big objectives for our conversation, one is around sharing what it is we do at the Discover Fund to drive financial health impact through investments in mission-aligned fintechs, and then to foster a space where we can think creatively about what partnerships could look like between our portfolio companies and FHN member organizations. So I'm very excited to introduce 3 of our portfolio companies today. We have Beatriz Acevedo from Summa Wealth. We have Jordan Wexler, CEO of Earlybird, and Landy Liu, who is the founder and CEO of Foyer. I'm going to just go ahead and kick it right off to Beatriz to get us started. I'd love to hear more about who you are, as well as the great work that you're leading over at Summa.
Yes, thank you so much. I'm so excited to be here. Good morning, everyone. I am Beatriz. I'm a very proud immigrant social entrepreneur. I'm originally from Mexico, but been in the US, particularly in California, for the past, 40 years now. So I definitely call the US home. I'm very excited about what we are building. My previous career and startup, which I sold a few years ago, was really focused on the underrepresentation of Latino youth in this country, knowing that they are US born, that they're English dominant, that they're college educated, and yet they had zero media choices that would appeal to them because everything was either in Spanish or English. So the English is sort of like a caricature and stereotype of who we are. The Spanish, many of them don't speak Spanish. So I got to work very closely into developing today, it's the largest digital media company for this particular demographic, and using sort of all of my learnings and insights from that company, I wanted to really rebrand finance and do something very, very different than what had been done in the past. And this is how Suma was born, right outside of the pandemic, right in the pandemic, in the middle of the pandemic, just seeing how our community was not just the hardest hit with deaths, but also economic hardship. I felt like if we added and leaned hard into our culture, we could make finance super fun, super accessible, and the most important thing, really make it a trusted brand. Our families come from many generations of financial trauma. We've all heard the stories, if you are Latino, of course, from our parents and our grandparents on how one day they lost it all in their countries of origin. And that takes a few generations down to really shake off. So for everybody, that trust is paramount when it comes to financial institutions. So that is why we're building what we are building. And we're just very excited to definitely have that seal of approval as being the most trusted fintech platform for young Latinos and their families. We're a very mission-driven company. We're a B Corp. We have all the certifications. We've curated our cap table to the T of who are our investors, who cares about the mission that we are trying to achieve. And so we're proud, and we have been at this for 4 years now. Next slide. Thank you. So our theory of change is that young Latinos are really those influencers and Sherpas and navigators of their families and their communities. And we believe that they are the critical accelerators of really being able to close the wealth gap within one generation. And I'll explain a little bit more of this why. But if you take anything away from this call today, whether at the end we are able to do a partnership or not, this is very, very important for my colleagues who are CEOs of other fintechs and for every single brand here. Young Latinos are really making an incredible difference. If you think about this, the most common age of a Latino is 14 years old, while the most common age of a non-Latino is 60, right? So when you think about the future, when you think about future-proofing your companies, your brands, the economy, etc., there is no future without this youth that is now more than ever educated and entering the workforce. So super, super critical demographic. Next slide. Okay, a little bit of what I already said. Just Gen Zs and millennials are contributing about $2.8 trillion to the US GDP. The entire Latino US population is contributing $3.6 trillion. Just to put that in perspective, if US Latinos were its own country, right, outside of the US, we'd be the 5th largest economy in the world. And we are the 2nd growing GDP in the world, just behind China and ahead of India. So that is really, really an important stat to know and to understand for people who continue to think, this is a demographic that are takers and not givers. This is a demographic that we have to support. This is a demographic that's making GDP in this country continue to grow. Without the Latino GDP in the US would not be growing at the rate that it is. So it is very, very important for people to understand this data and these facts. We are all here to do good and to do well in our communities, but there is a possibility to do well as well. Obviously, we are all for-profit companies. So this is one of the ways that we found out that is incredibly exciting to see that there is so much opportunity within this cohort. Something else that's super interesting is that the growth of the new net workers from now till 2030, 80% of that's going to be Latino, which is really interesting, right? If you think about who are going to be the workers of the near future, because it's already 2024, it is particularly this demographic. And we are very entrepreneurial. Sometimes it's by necessity and sometimes it's by choice. I became an entrepreneur by necessity after I lost my job in Mexico. And that is the case of many Latinos too. So most of Latinos at least have a side hustle, even if they had a normal company job. So supporting them in their entrepreneurial journey as small business owners is also very, very critical. So I've given you all the incredible stats for this demographic, but the opportunity lies in that even though we are driving all of these incredible areas, still 50% of Latinos in this country are underbanked, not unbanked, but underbanked. So there's an incredible opportunity, obviously, to support them, to do well, and to do good. Next slide. We have taken a very different approach to finance. We want that everything that we do does not look like finance, feels like finance, smells like finance. We wanted to look, smell, and feel like culture. So we lean very, very hard into culture, into pop culture, not just Latino culture, to make sure that everything that we do, from the content to the products to the services, are very much say to our community, you belong here. And we're very proud of that, and about the progress we've made. So I'll show you a little bit about how we know this is working in the next slides. So here it is. Well, obviously, one of the things that we're very, very proud about, and we track data day and night, is that we've been able to increase the savings for our group compared to the national average by 2.5 times. So we are excited to see that. We are very hyper focused on teaching our community how to save for the purchases that they want, more than to get into more debt for the things that they want to buy. Reduction of debt, that was one of the big things when we launched the company. People really wanted to know much more about what were the strategies, how we could support them in that. And now we could see with the data after 4 years that that has reduced up to 20% on average. So we're very proud of that fact. Our engagement is usually very, very high. It's usually at a 7x of any other fintech or financial institution measured by third parties, not by us. And why this matters, and we have a lot of case studies to share with you if anybody is interested later in partnering with us or seeing the case studies at least first. Why engagement matters is that when we have teamed up with different banks, that I'll talk about them in a little bit, engagement really brings those customers down the funnel, and it's really accelerates conversion. So when we see that our engagement is at a 2, 3, 4, up to 7x from another banking partner, engagement is just not something nice to have, but something that absolutely converts customers. And that is tied definitely to trust. And the other thing is we have 1 million users, but we have about 8 million in reach in all of our own and operated platforms. So we're able to really amplify and convey messages of our partners. Next slide, I'm sorry. Okay, this is really our secret weapon, and obviously I'm giving it to you to be your secret weapon as well, and why we are so excited and so hyper focused on the youth. Okay, this does not mean that I don't want to support the unbanked, older people, Spanish dumb, immigrants, non-college educated. We absolutely do, but this is how we do it. One Latino youth, on average, at least on our platform, is managing the finances of 3 additional family members. So this is what we call the Latino youth multiplying effect. When you think about impact, it's extraordinary, right? They are the ones who are those financial caregivers for their families, for their communities. So when you target one of them, you are immediately getting 3 additional family members or community people. And that is incredible when you think about ROI with customer acquisition or ROI with impact, right? Obviously, everyone on the call wants to do both. Our demo by design is young, Gen Z and millennial, because they are these sort of like leaders in their families and communities. Something super interesting is that we are very, very, very unapologetically Latino. Yet 30% of our million users are not Latinos. They're white, they're Asian, they're Black. They just love our approach to finance, that it's not the traditional one, that it's not boring, that it's just very, very approachable, and that it feels very welcoming. So we're proud of that, even though we are not diluting our brand to fit everyone, but obviously everybody is included, and we love to see that in our data. I think I had mentioned that most of them are small business owners, 70% of them, and the majority of them are female, which we love. You know, Latino men keep saying that they feel very comfortable managing their finances, which we clearly, when we see their data, they should not be that comfortable. And women say, we need help. We want to learn more. We want to get more education. We want more tools and resources. So we're proud that we get to support the Latinas in our community who make 95% of the home purchasing decisions, except when it comes to luxury cars or homes. Next slide. And we are already working with a lot of financial institutions. So if you don't see your logo here and you're on this call, we would love, love, love to talk to you. But we have had partnerships for the past few years, very successful ones that started with a few $1,000s and have now moved up to 7 figures, which we're incredibly proud of because obviously our banking partners have seen the results. So Wells Fargo, Chase, Morgan Stanley, Fidelity, Intuit are some of our partners, but we also work with non-financial institutions like T-Mobile or McDonald's, selling our wealth building membership to their employees or to their customers, or sometimes to both. So it's not an exclusive partnership with financial institutions, although that is the conversation we're having today, and we would love to continue to talk to you about that. And ways that we partner with you, obviously, most people are interested in qualified leads for your banking products and services. We are very picky into working with you to see what are the right products and services for our community that we can fully recommend. We talked about our higher customer engagement and why that matters. In culture, brand awareness, and increased brand affinity. And all of this, like I said, we have reports and we have data to share, cultural, demographic trends that are important, and also CRA credits, where we have our Sumaversity, which is our nonprofit side, and that is our education. So there we have certifications. We are the partners for all the HSIs, Hispanic Serving Institutions in the country, which have 5 million Latinos, plus their 3 family members that I mentioned before. We're starting a college tour. So for anybody here interested in coming along that in 2025, we would love to talk to you guys. We have, this demographic at scale there with every single Hispanic Serving Institutions and beyond. Even Ivy League schools that have Latinos invite us all the time to come to their campuses, tell them more about how they can start building wealth and how they can use our app and our coaching. And so, yeah, we'd love to share with you everything that we've learned in the past years, why our approach leaning into culture really works, and how we're doing it with other financial institutions. And I think this is the last slide, but let's see if there's one more. Yes, this is the last slide. So thank you so much, and looking forward to your feedback and to your questions.
Thank you, Beatriz. I'd love to kick it to Jordan next to share more about what you're doing over at Early Bird.
Yes, thank you so much. Hello, everyone. My name is Jordan Wexler. I'm the CEO and co-founder at Early Bird. Next one. So this is my dad. He invested in me when I was 8 years old, and it completely changed the trajectory of my life. Unfortunately, he passed away 7 years ago, and I don't have very much to look back at about who he was and stories and lessons he taught me. But one thing I do have is still that what was a TD Ameritrade account, now a Schwab account, unfortunately. But the kind of connection back to that and some of the impact that account has had on my life continues to remain. Next. Then 6 years ago, my beautiful baby niece was born, Izzy. And I was head over heels in love, and I found myself wasting hundreds of dollars on the most ridiculous things you could ever imagine. $60 onesies. It's just really crazy. And I didn't want to waste my money. I really wanted to invest in her as my dad had invested in me. But when I looked around, there was no simple or meaningful way to gift a financial asset. Next. As we dug in further, which I'm sure many of you are very familiar with, unfortunately, over 70% of US families are not currently investing in their kids, which means that the idea of building generational wealth is really a myth, and one that we have now set ourselves to solving. Next. So Early Bird today is the all-in-one wealth creation platform that helps every family save and invest for their child's future starting from day one. So one of the things that we are very focused on is new and expecting parents. really ranging from that 0 to 5-year-old demographic and getting every family to start investing really from day one. Our mission is through the power of love, community, and capital, we can actually democratize access to generational wealth for all families. Next. So how we do it is those three key pillars. So the first is capital, right? Creating the best-in-class user experience for any parent to be able to simply launch a custodial investment account. And we have 5 fixed managed early bird portfolios. And then, within 3 minutes, they can set a monthly recurring investment and start investing in their child's future. The second key pillar is community. So what we recognize is that having the sole responsibility of a parent to just invest in the child is a huge burden and extremely difficult. And so what we do at Early Bird is that we make it super easy to galvanize all the friends and family around this child that also want to contribute and be part of that experience, and making it extremely easy and meaningful for them to join their nest. And then the third key pillar is love. So this is one of the biggest differentiations about Early Bird and any other fintech product. What we recognize is money is scary, and there is a deep behavioral resistance towards prioritizing your finances, starting to invest, launching accounts, doing all this. It's all scary and bad. And, it's on that list of, I don't want to do that, or I'll do it later. What we recognize is that there is this power of love and meaning and emotional capital in this experience, where you are investing in your child, but investing in your child is more than just financial. And so on Early Bird, every investment in also includes a beautiful video memory or photo memory. So you are building a time capsule, a digital time capsule of love from both the parents, but also all the friends and family that help raise the child. So in the end, you are gifting your child that is now an adult, hopefully $50,000 plus invested over 18 years, and this priceless digital time capsule of all these special moments that you celebrated of the child's life, and we're able to invest in those small moments. And so think, instead of just birthdays and holidays, you're investing in first steps, first day of preschool, and you're able to contribute $1, $2, $3. So micro contributions throughout the year, which makes it a much more socially engaging process. So that is what the Early Bird app does. Next. As far as our target demographic, as I mentioned, right, we really built this product for the everyday American family. This is for the families that are probably early in their investing journey themselves, or this is actually their first investment account, which we found a lot of our parents to be. The annual household income really ranges from about 60,000 to about 120,000 is our core demographic. And we have a lot of families that are making 50,000 annual household income and below. So we believe we've designed this great product that feels inclusive for all families, very diverse backgrounds, and really a space that any parent can get started, again, within minutes. And so today we have over 100,000 total Early Bird users, with about 25,000 funded active Early Bird accounts. So we're very proud of that. Looking in the future, what we recognize is that by owning that 0 to 5-year-old space and being the first investment account for every child, we have the opportunity to own that entire 0 to 18 plus lifecycle journey. And so we are still very much focused on that first phase of work, but we are working towards this much greater opportunity, which includes banking, of course, and being the first wallet for every child and that family, and then a much more integrated teen experience, so that these kids are building financial literacy throughout their childhood, and by the time they become age majority as an adult, they are very confident with the money invested, how it's all working, and they're able to continue to invest for their goals and achieve financial freedom. And that is Early Bird. Thank you so much. Excited to talk more about partnerships and all the exciting things ahead.
Great. Thank you, Jordan. Really appreciate it. Landy, I'd love to hear more about you and what you're building over at Foyer.
Thank you. Hello, everyone. My name is Landy Liu. I'm the founder of Foyer, and we are designed to be the entryway to homeownership for the next generation of Americans. By way of background, I was an early employee of a company several years ago, a mortgage lender, in fact, that has now since gone public. And I left that experience in 2022, realizing just how difficult it was for first-time home buyers, this younger generation of aspiring homeowners, to understand how to get started with homeownership, despite 70% of millennials and Gen Z wanting to own a home in the next 5 years. With the biggest hurdles being knowing how to get started, the education of understanding homeownership, and saving for a down payment. And it was that year in 2022 that I was in fact looking to buy a home. I was in the process when the market completely flipped on its head. And I think all of you on the call are very well versed in what happened with interest rates in 2022. On the mortgage side, mortgage rates doubled that year, and we found ourselves in perhaps the most inaffordable real estate environment in the last 50 years, and it has since gotten worse. And I decided that was the year to build Foyer. I was looking to purchase a home and used the down payment, in fact, to start Foyer. And I'm now a user of my own product, which I'm a big believer in. So let's get started. What is Foyer? We have one mission, and that is to help save the American dream of homeownership when it is in crisis. Next slide. And what we've built is the most confident journey for aspiring homeowners to get started. It all centers around a home goal. What we realized is people, they don't necessarily fall in love with a savings account. They don't necessarily fall in love with a mortgage. They fall in love with what they're saving for. They fall in love with what they're financing. And that is the home in our case. And so consumers using Foyer set a home goal. They start saving on our platform, which we enable them to create savings accounts dedicated towards homeownership for. And we even help them understand how to buy a home and direct them to the services that are relevant to them, like a mortgage, like a real estate agent, when the time comes. Next slide. With Foyer, we help Americans save, learn, and earn more towards their first home. We're a dedicated product. You have an account for everything these days. In fact, there's been accounts for long-term goals for quite a long time, whether it's a 401k for retirement or a 529 for college education, or even healthcare savings accounts for healthcare expenses. I remember thinking to myself, as I was looking to purchase my first home, why don't I have an account for my down payment, the biggest purchase of my life? And that's what we are. We are a dedicated place to save, learn, and earn. There's actually 10 states now in the US that offer tax advantages for saving for your first home, and we are a product that can help consumers earn a little bit of extra when it comes to that process of saving. We're big believers in the education here, where only a third of Americans understand the home buying process, despite so many Americans wanting to own a home one day. And we offer incentives throughout our app that drive engagement. We've learned that rewards, moments of delight, really help consumers stay focused on the goal, and our whole user experience is designed to keep people motivated. Next slide. All the while, we are building a dynamic and personalized approach. Everybody has a different goal. Everybody, despite that, has the same types of question and needs. And what we do is we collect data on someone's home buying journey, how they're saving, where they are in terms of their understanding, and we provide recommendations. We're really proud to provide connectivity, for example, and down payment assistance programs across the US. There are thousands of programs that are extremely hard to navigate. We create customized plans all in the app, depending on whether you're wanting to buy a home in Detroit, Michigan in 2 years, or Ohio in 5 years, or some cases New York in 100 years maybe. And we are doing it with care and a dynamic data-driven approach. And where we're at today, after just about a year live, is we have 20,000 downloads. We're seeing great reviews, and we're seeing real excited consumers depositing. Next slide. Most importantly, we're seeing people buy homes. And our first cohorts of customers are becoming homeowners today after planning, saving, learning, and earning with Foyer. Next slide. And finally, where we're at now is we're excited to partner with companies to help you attract the next generation of customers who are motivated by this big goal of homeownership. We want to help you drive deposits and also, importantly, drive other types of services you might be offering, like mortgage originations. And our user experience is really an intuitive way for consumers to move through this journey. And we're offering a white labeled co-branded solution for both financial institutions and employers who are seeing us as an extraordinary benefit for financial wellness for their employees. Thank you.
Thank you, Landy. Appreciate your sharing more about Foyer. I'm now going to, now that we have a sense of what these companies do and how they do it, I want to transition us into a discussion about what partnerships could look like with these companies. So, you know, thinking about whether through a corporate business line or the CSR and philanthropy side of the business, how you might partner with innovative fintechs like Summa and Earlybird and Foyer to drive both business and financial health impact outcomes. So partnerships can look like a lot of different things. It can be fintechs helping you reach hard to access market segments. It can fintechs can help enable efficient, high impact philanthropic efforts, or even co-develop products that enhance customer engagement. And these are just a few of the many examples of what partnerships might look like. I wanted to first start with Beatriz. I'd love to hear from you about a particularly fruitful partnership that you at Summa have undergone, and what made it so valuable. Who was involved? What was the context? To sort of give an example of what a partnership might look like.
Sure. I'll give one quick example on just traditional partnership, and then, well, philanthropic, like I mentioned before, has all of our educational side with our Summaversity, and anybody interested in CRI credits, etc. We have that going. But on a more traditional partnership that will hit your P&L, that's not philanthropic or it's not D&I, I would say the most productive partnerships that we have with half a dozen banks would be really helping them understand this demographic that has been out of their sight forever. Like I mentioned, when you think about Latinos, like everyone's unconscious bias goes to Spanish dumb immigrant, probably not college educated, unbanked, etc. And that is a reality, but that is only 20% of the US demographic when it comes to Latinos. So the other 80% who are caregiving for that 20% are very, very critical. So for us, I think the most important thing when we do a partnership is to really open their eyes into this emerging affluent demographic, where by supporting them, you are still supporting the unbanked and the low moderate income, which is their older family members, but you're able to accelerate sort of like that gap when it comes to wealth building. So I would say there really that education first to our financial institutions, and then really understanding what products and services do they have that are going to support this core demo, and then in turn their additional family members, which sometimes are not the same products and services. Somebody from their family might need a a checking account, where our core demo definitely is bank there because that's how they connect their account. So it really runs the gamut. Some want to understand the difference between culture and language. So a lot of our partnerships focus on doing that, or co-branding any of the initiatives that we are doing. And then they have that access to the general data of, what are the trends, what's the demographic doing, why this is important for them, etc. But we have all the specifics in different partnership decks that we can share later if anybody's interested in more detail.
Certainly, yeah. It looks like we have a question from Jennifer at Thrivent. Beatriz, you used the term youth in a headline on one of your slides, wondering how you define youth. Is it Gen Z, millennial, specific age group?
Yeah, Gen Z and millennials are our biggest demo, 18 to 34. Although like I said, once you add the family members, you can go up to 54. But our core demo is Gen Z millennial, which we do see that they are sort of like those very important influencers in their families and the financial caregivers. And then as a second demo, we have their older family members.
Great. Thanks for sharing. I'd love to hear, Jordan. I know that you and Early Bird have recently launched an exciting partnership in Delaware specifically, and would love to hear more about more about that partnership, context, who's involved.
Yeah. So, we've been around now for over 4 years live, and I think it's our mission to democratize access to generational wealth, of course, has to start somewhere. And we've always had the intention to be a solution for families in need, lower socioeconomic families that, really may not have started investing and or just have the support necessary to begin investing. But it's hard for startups, right? You have to be very focused on, of course, getting up and out and getting a core base. And so just last year, or about almost a year and a half, 2 years ago now, we got in our seed extension round, Resilience VC, which some of the people on the call as well were able to invest in us. And then that opened up a door to collaborate and partner with Discover Bank and some of the awesome work that they are doing in the philanthropic space. And basically, we started from scratch, kind of thinking about, okay, how could we structure a program that would really help, that you could use the Early Bird platform to help families in need. And we were able to have a couple brainstorm calls around who would be a great partner, because it's really a triangle where you have Early Bird as the solution, you have Discover Bank as, the kind of backing infrastructure, and then we needed a third partner for the triangle to be the facilitation on the actual like nonprofit side. So how are we going to actually access and source and, work with these families? And so we were able to do that. We found a great organization that Discover Bank had already worked with a lot called Leon Wiener Foundation. And we, like many things, takes time to design and really think through how to build out the program. But we are now officially launched with bringing on the first 100 families. So the Leon Wiener Foundation works with, housing projects in Delaware, in the state of Delaware, and we've brought on 100 families to be able to both fund their accounts with seed investments of $50. And then we have a couple different matching incentives. So if they invest up to $15 per month, the foundation will match that $15. But what is most exciting is that we also attached an incentive around rent, which is something that we're digging into a lot more about. So if these families are paying rent on time, they also will get a boost in their Early Bird account from the Leon Wiener Foundation. So if it's 3 months in a row, it's $50, I believe, 6 months, 100, and 12 months is, $200. And so there's tiers that continue to just incentivize that positive behavior of something that you're already doing, but also being able to then invest in your family and the child's future. So it's a really exciting program, and we're just got it stood up and it's now live. And of course, there's a lot of details that get to be worked through, but it's having the support, of course, of Discover Bank and the Leon Wiener Foundation. That's that triangle that I think is so important for initiatives like this.
Totally. Yeah. And I love the sort of there's benefit for all the different stakeholders involved. You get more assets under management at Early Bird. Discover gets to efficiently deploy philanthropic capital into communities. And, obviously people, in these affordable housing programs get access to seeded investment accounts, which we know, folks get help, have help getting started. That can make such a difference in keeping those investment accounts open.
Yeah. Yeah. And I think
That's
there's
great.
financial literacy, of course, is a core component of all of this. So, being able to really work with these families, meet them in person, work through some of the learnings on, what it means to actually start investing and putting away money, and tailoring that material to be really useful for these families has been a big step. And then, of course, the larger vision here, though, is that this is 100 families, right? We have to prove this works, and then 100 turns into 1,000, 10,000, and hopefully this becomes state, or city and then state-based policy that we can actually enact and put into play. Because that's always the bigger vision with a lot of these types of projects. And, we're doing a similar initiative in the state of Colorado with another great organization called Gary Community Ventures. And so, it's setting up enough of these pilots to prove the validity that this can work. And then, of course, trying to move our fun politicians to take some action.
Yeah, certainly. Okay, Landy, I know that Foyer is on the earlier side, and so I would love to hear about how you're thinking about future partnerships and what would be especially important and powerful for you as you think about growing your business.
Sure. Yeah, we're now entering our getting close to our third-ish year, and the last year or so, we've seen a lot of interest from partners. They range in type, from employers wanting to offer Foyer to credit unions. And that gave us a reason to really invest in this partner-facing product of ours to make it more easy for others to invest in homeownership on behalf of their members, their employees. I think for us, recognizing that homeownership is an important, perhaps one of the greatest ways to build wealth in this country is a really important part of our mission. We're looking for like-minded partners who believe in this ownership economy, that understand that especially if you're low to middle income, especially if you are a minority, homeownership, participating in homeownership is such a big determinant of financial stability and wealth creation across generations. And the companies we've partnered with, fortunately, are extremely aligned in that, and also see value as to how creating a homeownership experience in their own ecosystem can drive real results. It can drive more engagement with this demographic of younger first-time home buyers. It can drive real revenue if it comes to the actual transaction of the home. And so we've seen a lot of different use cases based off of the partner, but we're always looking for folks that first are aligned in this mission that we have.
Yep, totally. I want to recognize that new partnerships can take time from that initial conversation to actually implementing that partnership. And that can be a challenging journey, and would love to hear from any of you about strategies that have helped sort of maintain momentum through that process, and how you kind of worked through that.
Yeah, I mean, listen, a big partnership can take a year. So for us, we've learned to start small, or that's how we started a few years back. Just like, let us prove to you that what we're telling you really is going to work and it's going to make a difference on your bottom line. Again, we're very mindful that yes, we want all the impact, but on both sides. So sometimes it means even taking a hit with a partnership where you're like, okay, this is going to take a lot of our time and it's going to also probably we'll have to make an investment to really show where this can go. But at the very beginning, years back, we did it to make sure that we could prove ourselves, especially because our partners are really big banks and big names and we were nobody. So once we started with very small partnerships, they would like, 10x that partnership, 100x that partnership. So it was worth it, but it definitely takes a lot of time. And you're a startup, so you're, trying to manage through the burn of your cash, of your time. You have a small team. So it's definitely always a challenge, but I think you have to, be mindful of what could this mean into the future, having a partnership like this and sort of weighing those options. But I would say my recommendation for both financial institutions and CEOs is start small with a pilot, show them what you're talking about, and then get them excited to continue the partnership and growing it.
That's great. Yeah, kind of getting at what Jordan was saying.
Yeah. I mean, I think just to piggyback a little on that, I think adaptability is critically important, and knowing everyone on this call that we, there's some major names and corporations, and, it would be an absolute honor for any of us startups to be able to partner with you guys. And so for us, there is the privilege that we are able to provide of adaptability, right? You guys have some of your specific needs, and we provide what we provide, but the willingness for us to be able to kind of fill those needs is huge. And then of course trying to do that in a speed that enables success is huge, because unfortunately a lot of startups don't have 2 years to you know work through things, and we do need to figure out how to start small and start now. And so with that, if you guys see benefits in home ownership, or if there's any angle there, I think that there's, or family investing, and figuring that out and knowing that we can adjust as necessary to fit some of the needs that you guys have to deliver.
That's great. That's helpful. Thanks, Jordan. I see there's a question in the chat from Amy Hartman. She's curious about how you're thinking about data privacy agreements and other plans that founders may have to monetize data being collected from users, the difficult trade-offs, important conversations about how to build trust among underbanked communities. Not sure if
I mean, we don't sell the data per se. We'll share insights from collective data of learnings from a group or a cohort. So we're mindful of that. And absolutely, like our biggest thing that we have to offer anybody that we partner with is the trust that we've built. So we want to be very, very mindful of never losing that. It's very hard to gain and it's very easy to lose. So what we share with our partners is really something on a very high level aggregate, and those learnings and those insights that can help our community and help them as well as they're thinking about what products and services are important for them.
To add to that, we take data extremely seriously, especially given we're a data-driven company. And a couple principles, come to mind. Of course, we have all of the terms and conditions and privacy policies in place. But I think one of the most important principles is to be consumer-centric and make sure that we're transparent with consumers. We give them choice in how that data is used and what they want to opt in and out of. And similarly, our business is never going to sell someone's data. And I think that's the kind of a foundational thing that is important for us as we design our product experience and continue to be consumer-centric.
Great. Amy, I saw you come on video. I didn't know if you wanted to say anything else. Okay, great. Cool. We have a couple more minutes. I'm wondering if are there any other questions from folks in the room, in the virtual room? Feel free to drop in the chat. You can also just come off mute and share and ask.
I want to add something to Jordan's comment earlier on how working with, well, anybody has a question. If you do, I'll stop. But I think it's I sit on a board of a bank, and I hear how nervous my colleagues from the board are many times to partner with fintechs. So I kind of have the privilege of listening to the other side of like, oh my God, they're like, they're super fast and we are not, or they're just, figuring it out as they go, but I think that combination of the, massive compliance from a traditional bank and maybe doing things in a slower pace or in a different way than startups do is a very nice combination, right? If you really can figure out what are the things that we don't have, that those tests that can be done quickly within, the fintechs, those things that we've been wanting to do, that if we have a partner, it's almost like think about it as somebody who has a quicker lab than you do at testing things, implementing, learning, being ahead of the curve. I think that's incredibly exciting. And it's a really incredible partnership for us. Obviously, your experience, your learnings that you've had for many years, plus our speed, our enthusiasm, our innovation, I think can make us a really good match for each other. Obviously, always being very mindful of compliance and of all the things that we all need to be mindful of. But don't be scared to partner with fintechs. This is my message to my own bank board and to all of you.
That's great. I think that's a lovely way to sort of put a bow on this conversation. So thank you, Beatriz. I'm going to kick it back. Well, first, I just want to thank all three of you for joining this conversation today. I know as CEOs of startups, you are very busy, and so I really appreciate your giving us an hour of your day to share more about what you do and the important ways that you're driving financial health forward.
All right. Excellent. Well, welcome everyone. I'm Mark Torlucci. I'm a client success manager and the project lead for the industry roundtables here at the Financial Health Network. We're happy to bring you another roundtable in 2024 as part of your member exclusive benefits. I'm excited about today's session. It's going to be definitely a good one for a lot of our panelists have a lot of good information to share here. As you may know, at the Financial Health Network, we're dedicated to supporting responsible innovation that drives financial health. And today, we're excited to share an initiative that truly embodies this mission. Our longtime partner, Discover Bank, has recently committed $36 million to launch a mission-driven investment fund to empower innovators focused on improving financial health for underserved consumers, communities, and small businesses. This fund, created in collaboration with Chartline Capital and Resilience VC, has already supported 10 companies, and today we're thrilled to showcase their innovative solutions. With that, I'm going to go ahead and turn it over to my colleague MK, and we'll get today's event kicked off. Thank you again for joining.
Thanks, Mark. Hi, everyone. It's so great to see all of your faces on the call today. My name is MK Falgu, and I am a program manager on the Financial Services Solutions team here at Financial Health Network. And in my role, I get to work with financial institutions of all sizes to advance solutions that will improve the financial health of their customers and communities. And one of the hats I get to wear is on the Discover Financial Health Improvement Fund, working with my FHN colleagues to evaluate the financial health impact or potential financial health impact of different companies coming through the portfolio. So we're really excited to be here today. I'm really excited to be here with all of you today. So many financial health champions, both in our membership as well as these wonderful founders. We have 5 on the call today who are going to share with you what it is they do, how they do it, and how it drives for financial health. We have a, so thanks. And the way we're going to go about, or sorry, let me take a step back. So we're excited to hear about what they're going to do. And then we're going to spend the second half of our conversation talking about partnerships, what partnerships might look like between these portfolio companies and member financial health network members. So to get us started, we are going to first hear from our 5 portfolio companies. We have 5 companies we want to get through today, and so I am just going to kick it right off to Saran to get us started by sharing who she is and what it is she's doing over at Mirza.
Great. Thank you so much. So hello, I'm Saran. I'm one of the co-founders of Mirza, and we are, in a nutshell, a common app meets TurboTax for government safety net benefits, starting with childcare. So next slide. Why childcare and what is the financial impact? So childcare and work are deeply intertwined. It is the #1 reason parents quit their jobs or cut back on hours. So this really means for families losing an estimated $78 billion a year in lost wages due to childcare issues. What's more for financial health? 40% of parents are in debt over the cost of childcare. Next slide. So where we play is particularly in addressing financial health for low-income families. So many of those folks are eligible for government childcare subsidies. And so there's over $20 billion of federal funds alone. States and local counties and cities will add in additional programs and additional funds. Because this is so complicated, only about 20% of families who are eligible for childcare subsidies are actually getting funded. Next slide. So we're, in a nutshell, a really simple single point of entry. So everything and anything from federally funded Head Start, early Head Start, to state subsidy, to local pre-K initiatives that usually live in different offices, different locations, different applications, we streamline into one single, very simple common app sort of experience. You pull Mirza up on your phone, in less than 2 minutes can identify what programs you're eligible for, and then we'll generate your applications from applying through Mirza one single time. We're really easy to access, so it's built to be mobile native just on your mobile web browser. We're in 7 different languages today, with more coming out by the month. And at the hours that actually work for folks. So we're really built to be supporting frontline workers and families when they need us and in the way that they want to access us. So why this really matters, we started working with, so we're fairly new. We started working with clients earlier this year, and we'll share more about our partnerships later on, but what we've seen is that we have 4 times the uptake of a traditional wellness benefit. So in just 1 quarter, when we launched with a client, we were able to get more than 3/4 of their eligible employees through our product. One of our largest clients is the UFT, and about 94% of their users had said this is a really important benefit to be receiving. Next slide. And I want to make this real with an example. So what this means for financial health, think about Grace, who's a single mom who's been studying as a nurse in Kentucky. She just had her baby, but the cost of childcare is far and away above what her take-home pay is after the essentials, her taxes and healthcare and rent and utilities and all of that. So instead of not being able to afford childcare at all and trying to figure out whether she can afford to work, what we do is help Grace get access to childcare subsidy that takes away the lion's share of that cost. Instead of paying $1,400 a month, that is not possible. Grace pays less than $250 a month. Next slide. And what's really cool here is that this also extends across income spectrums. So we talked through an example of a single mom. This is another example of a family living in Maryland. And families who earn up to over 100K in New York City with a family of 4 are able to qualify for these childcare dollars. And what we're really doing is making sure that the families have optionality into how they work and being able to take care of their families. Next slide. And what we're doing from here is really expanding to safety net benefits overall. So starting next year, we're launching SNAP and WIC in a couple of key states, and then moving on from there into housing assistance and more. Thank you so much.
Thank you, Saran. I really appreciated those personas to sort of demonstrate what this really looks like and the tangible impact on real people's financial lives. So thank you for that. Next, I'd love to pass it to Elizabeth to share more about the cool work she is building over at OS Benefits.
Yeah. Hi, everyone. I'm Elizabeth. I'm the founder and CEO of OS Benefits based down here in New Orleans, Louisiana. And what we are providing is the first health insurance plans and wellness benefits made for and by the hospitality industry. But I'll dive into that in a moment. Go into the next slide. To put this into context, over the course of people's careers, usually one out of every 3 people, Americans, have worked in hospitality at some time in their career. And with more than 12 million hospitality workers in the United States, it's enormous. It's the second largest industry in the United States. Go next slide. But what might surprise you is that only 34% are offered employer-sponsored health insurance. And if we were to look at that against the national average for the private sector, which is right around 85%, it leaves a vast majority of us very exposed. And what we're turning to now, as you'll see time and time again, is that people are turning to GoFundMe's to ask their neighbors, ask their friends and family for financial help when they have to go out of pocket, and it's leaving an immense amount of us unbelievably vulnerable. And so another interesting thing is that it's a really steep barrier to entry. So for small business health insurance in the United States, you have what really the cycle we find ourselves in is that if you're looking for small business insurance, the employer is going out for a high premium, high deductible plan is what they end up being able to secure when they're in that small business under 100 full-time equivalents. Then they really aren't able to contribute a significant amount to make that accessible to their team. The employee then gets a high monthly premium where they have to weigh between, like Saran was mentioning, all of these things they have to weigh between rent and childcare, and many go without healthcare. So usually most of our companies that we're seeing have like a 15 to 18% participation rate. They receive high deductibles, they have low participation, and then they get audited because it tends to be that the most, those who need the healthcare the most are those who are opting in. And then as a result, annual deductibles go up and the cycle begins again. And we were looking about this. This is not just an issue of care at this point. It's about retention and recruitment in the hospitality industry. And if you see headline after headline celebrating, companies and celebrating teams that are looking and making investments, but this is just the beginning. At OS Benefits, we have built the first health insurance and wellness benefits. So here you can see an example on the right-hand side of the product itself. And what we're really doing is we have built an association where our restaurant partners become members of the association. And as a result, it unlocks 2 very key elements. But what we're doing is aggregating the buying power on behalf of almost acting like a larger group on behalf of small businesses. So our membership has 2 key offerings. One is the health insurance and then the wellness benefits. And I want to apologize again that the fonts did not carry over. So I'm slightly apologize that these are a little wonky. In terms of what the benefits, the health insurance plans are really trying to solve is that we knew we need to address 4 key elements. One was low premiums, no to low deductibles, low copays, and unlimited free telehealth. So if you continue to click on, Erin, here you can see this is our we have 4 plans I'll go to in a moment. This is equivalent to our middle range PPO plan. So what you can see against the national average is we're unbelievably competitive in price, and allowing our restaurant partners to bind to our health insurance plans, and then at a shelf stable cost by having negotiated through the association. The costs are stable, the plans are stable, and we actually are able to grow as a group, which I think is really important when you think about how people are currently binding the small business health insurance plans. Here you can see our 4 plans. To kind of graze over the importance of them is, as you can see, the pricing up front on top is what people will pay. It is stable for us for the course of the entire year. And as we get larger, they're seeing us as an association, as a larger group. We actually have the benefit of having our premiums going up much less than national average. Right now, our small businesses are seeing an 15 to 18 and 20% increase in premiums year over year. And that's something that's really causing the access to care to becoming even more out of reach for a lot of our operators. And here we have our essential plan, which is an EPO, and then 3 PPOs, which I'm happy to go into more detail at a different time. But we do have our dental and vision plans as well for voluntary. On the second half of the business, this is our wellness benefits. Here we offer free and reduced rates off of over 25 vendors. So this includes childcare, dog walking, fertility monitoring, Plan B that ships nationwide for free, culinary tools and apparel to really address the needs of our particular demographic. Here's a sampling of those. But one thing that's really important is that when you join the association and get a dashboard, you can choose the healthcare route, or your team will automatically all enroll in this for free. The way it's structured is we have 3 pricing. We have our association membership that the employer pays up front. For the employees that opt into health insurance, we have our $25 per employee per month to do the administration of that. And then finally, we have our monthly insurance premiums that we are collecting and distributing to the insurance carrier. And our plans start at $239 per employee per month nationwide. And I think at the end of the day, what really matters is that I joke as an industry, we're seen as like a band of pirates out in the Atlantic, all trying to find one another, because we tend to be under 50 full-time equivalents. There's over 450,000 independent restaurants. But I think the most important part is, although we are independent, that doesn't mean we have to do all this alone. So this association allows us to bind buying power and build towards a future that can protect a lot more people.
That's great.
Thank you.
Thank you, Elizabeth. That is wonderful. Exciting to see a solution that's really demonstrating, the power of working together to create more access to health insurance. That's great. I would love to turn it to Tom to share more about his work over at Inc.
Hey, everybody. My name's Tom McGrath. I'm a CEO and co-founder at Inc. You can go to the next slide here. So just to kind of kick things off, the average insurance claim in America is $12,500, and that's specific to property, so not your car or anything like that. And that can be anything from, a hurricane, destroying your roof, or, the toilet flooding after Thanksgiving and needing to have a plumber and a water restoration person come in. I recently learned that the day after Thanksgiving, not to be gross, is called Brown Friday because it's the most amount of times plumbers have to come out and fix things and there's insurance claims. But going to the next slide, the average amount in a homeowner savings account, particularly in LMI communities, is about $800. And what we found, particularly as it relates to natural disasters, is things like hurricanes actually tend to impact areas of lower economic advantage in a more concentrated way, because those are the areas where property values are lower because they know they're flood zones, or they're areas where hurricanes will hit, so the property values are less. And so all to say is that a lot of what we see with natural disasters and people needing to file insurance claims, if they even have insurance, or if they have the type of insurance that would cover the damage, is usually lacking. I can tell you with Hurricane Helene in particular, a lot of people, because of where they were located, don't have any flood insurance whatsoever, and they're having to come out of pocket on these things. And so going to the next slide, what we do at Inc. is we help both homeowners. This does include property owners. We do work with like people who own restaurants and things as well, including the restoration professionals that may help repair their properties, get paid up to 60 times faster after an insured property loss, because for many of those individuals, like I said, who, only have $800 sitting in their savings account, and the total worth of the damage might be over $10,000, they could be sitting for a while waiting for those insurance claim funds to be released from both the carriers. And then there's a process that's pretty lengthy that we handle related to the mortgage banks that own the property, that want to ensure that those funds are being used for the right purpose. Nobody's going off and buying themselves a new car, paying off credit card debt. They're actually using those insurance funds to restore the property. So through a combination of intelligent workflow automation and a digital payments network that connects everybody who's really involved in the restoration of a claim, whether it be the insurance carrier, the mortgage bank, a public adjuster, a contractor, or even a retail financing provider who needs to step up because the insurance claim won't cover everything. We're bringing all of those people together to really speed up how fast we can get both homeowners back into their homes, small business owners like a restaurant who maybe don't have business income coverage expense up and running. There's a pizza shop across the street from my house that does about $1,000 a day. And they were waiting on their insurance money to get back up and running, and they probably lost close to 30 grand just waiting. And most small businesses, that's a pretty big hit to cash flow. And then on the flip side of it, you have the guys who are actually fixing the properties, and a lot of them are very altruistic, and they try to front their own money to buy materials, but obviously there's a limit to how much they can do that, if they can do it at all. And so the delays in getting these funds released can also really hurt those businesses. I'm sure for all of you guys on the call, you're pretty financially savvy. Like, cash flow is the lifeblood of any business. If you don't have it, it's pretty easy to die, and it's already hard as a small business, to keep things up and running, as many of us on this call know. So how do we know that we're ultimately impacting, the financial health of the nation here? Is if you go to the next slide here, I think we've processed, getting pretty close to the $2 billion mark worth of insurance claims. And, kind of, as I mentioned before, based on the nature of where a lot of natural disasters and things tend to happen, 32% of the property owners that Inc. serves to help them get back into their homes, on that 60x faster timeline, reside in LMI communities. And I think it's even more important, to get families back into their homes now, especially after COVID, with remote life, because the home just isn't the home anymore. The home is the workplace in many cases as well. So it's impacting their livelihood. I had a guy who was a disabled military veteran who was working cybersecurity, and he couldn't be in his house, so he had to work out of a Starbucks. And I guess it was very disruptive to his work, and he ultimately got fired because which kind of really sucks. He just needed a quiet place, to work, where his kids could also be, that were safe, because he had a couple kids as well, and he's having to pay extra for daycare to, have a place for them to go. But again, on the other side, it's not only those property owners, those homeowners, and those small business owners. It's also the individuals who are serving them. So on the next slide, many of you guys had talk about, the small businesses and, the cash flow problems that they have, and trying to save money with health insurance benefits. That'd be really nice if you could help me with my health insurance benefits too. I don't know if it's just for restaurants, but 24% of the small businesses that Inc. serves reside in LMI communities, as well as service those communities after insurable losses. So not only does the owner live in that community, but he's also serving that community. And that's kind of the metric that we look at for, how we're really helping financial help, is the total number of dollars that we're processing and getting moved more quickly, and the percentage of those dollars that are related to both the small businesses and the families residing in those communities.
Thanks, Tom.
Sounds like there might be the beginnings of a potential partnership, I hear, between OS Benefits and Inc. happening. We'll have to circle back to that. Thanks so much, Tom. Let's turn to Avi and hear about his work over at Alice.
Thank you. Hey, everybody. What Alice does is we make commuter benefits for people who work on their feet. Next slide, please. So in most parts of the United States, there is a commuter benefit law on the books in these red circles where almost 60 million people work. You have to have one if you have more than about 20 employees. Next slide, please. But if you work on your feet, like in a restaurant or a coffee shop, you can't predict what you're going to make next month, much less next year. So you can't do an open enrollment. You don't know your shifts or hours. And that means you then can't do fixed contributions into your pre-tax benefits. Next slide, please. And that's because the benefit industry is designed for people like us who are sitting at a desk in front of a screen, whose phones are in front of them, where there's conference rooms where someone can talk about open enrollment. You know exactly what your paycheck is going to be. 2 weeks from now, you're probably going to be at the same job next year. But even in office worker land, the benefit companies don't have a great experience. You can see that with these 1-star Yelp reviews. Next slide, please. If you are working on your feet, like you're a barista, you're a bartender, you have a variable paycheck, you are possibly speaking a language besides English, there's no place for you to access the internet at your workplace, your phone is put away, you're not in front of a screen, there's not great internet, you probably don't have company email address on which you're going to hear about employee benefits, and employees are moving from location to location to location. Just think about where you're going to get a salad today for lunch. That assistant manager probably works across a couple of different locations. Next slide, please. So what we did is we built or rebuilt commuter benefits so that employees who have variable pay can use them. Here's 4 guys in New York, 2 bartenders, a barista, and a facilities manager, and they are unlocking $300, $400, $8 in their paychecks. And the way they're doing that, next slide, please, is they're connecting their own credit or debit cards. Here's my JetBlue card. I use it to tap at the subway so I can get my my miles. Or we'll give them Alice card, which they can put in their wallet or stick in their phone and tap at the parking meter or at the train. And then Alice sees that spending history, uses that spending history to automatically set their benefits and benefit elections, and changes that every pay period to match how they're earning and working. Next slide, please. So the employees connect us to spending, the employer connects us to their payroll system. And once they do that, they don't have to do anything else. Alice sets up the benefits and then administers them enters into payroll every pay period, the appropriate amounts for employees that are working, moves employees around between locations, and just sort of handles the multi-location retail Main Street problem that employers have when they think about offering large workforces who are not always working in the same place, pre-tax benefits. Next slide, please. Once Alice sees that spending history, we'll message with employees in the preferred language to understand how they are getting to work. They'll confirm what is for commuting. We'll help them see just how much the benefit is saving them, and they really love that. Next slide. It works on all the forms of mass transit, all the kinds of parking, street parking, lots, meters, garages, apps. It's not, again, just for big cities like New York or Chicago where it is the law, but also places where people have to park, like in Los Angeles, where there's street parking that's super expensive, even if you're taking your own car. Next slide, please. So Alice just works for employers. We make you compliant with commuter benefit laws in a couple of clicks. More of what employers pay their employees reaches their pockets instead of Uncle Sam. It saves HR teams time. And next slide, please. One of the best parts about what we do is our business model is also built for Main Street employers who hire the largest portion of American workers. Alice is cost neutral. The government gives employers a small payroll tax incentive to offer these benefits to their employees, and Alice takes that as our only fee. So that's why employers use us. Because they become compliant, doesn't cost them anything out of pocket. More of what they pay reaches their employees, and employees get to keep hundreds of extra dollars a year in their paycheck, which brings down the cost of getting to work. Thanks so much.
Thank you, Avi. Sorry, I was trying to find my mute button. Thanks so much for sharing more about what Alice does. I'd love to turn it to Craig to share more about Gig Wage.
Thanks. Thank you everyone for being here. I just put my LinkedIn in the chats. I'm going to be very disappointed if each and every single person on here does not connect with me on LinkedIn. So please don't. As entrepreneurs, it's really hard out here, so don't disappoint us today. So I'm Craig J. Lewis. I'm the founder and CEO of a company called Gig Wage. Hopefully the name speaks for itself. But the simplest way we like to think about the world is we are a payroll company for the gig economy. I believe on Avi's, one of his slides, you may have saw a logo that said ADP Run, which is ADP's small business cloud-based product. I was one of the first people in the world to sell that product back in 2008, 2009, when ADP transitioned from services to cloud. And so I've decided to build a payroll company that helps businesses, small, medium, and large, that have swaths of 1099 workers, independent contractors, gig workers, contingent workers, or any number of names they may go by. And what I figured out was that, you know, it was a square peg, round hole kind of moment where either people were trying to use regular payroll companies to pay these contract workers, which is a very different type of work and interaction, or people were trying to, you know, kind of force a bunch of services directly to the workers, where all they really want to do is just go to work and make some money and pay their bills, and it was too cumbersome. So I thought, why not put the onus on the businesses that are managing this different, unique, but extremely important part of their workforce. So with Gig Wage, businesses sign up. We help them get money into Gig Wage as fast and as flexibly as possible, with the sole intent of getting money out of Gig Wage to these workers for their hard work as fast and as flexibly as possible in a compliant way. So the journey is really simple. A business will sign up. They may have 100 workers, 10 workers, or 1,000 workers. They're going to maybe want to background check those workers. They're going to maybe want to do ID 10 checks. They're going to want to do onboarding, W-9 collection. And they're going to want to do that in different ways because the gig economy is not really standardized. And so we meet the companies where they are to onboard workers. Once they've done that, we provide a bunch of self-service tools for those workers. And then we make it easy for the businesses to pay, manage, and support these people instantly, same day, and on demand, without any financial arbitrage. We don't lend money, although that is on our roadmap. We move money one-to-one with instantaneous reconciliation. So businesses can now pay people instantly and on demand, like payroll, and not have to worry about tracking or advances, and the same thing for the workers. And so although it's very much like basic payroll for independent contractors, it also is for independent contractors, and they are not a part of your organization. They have 2 to 3, sometimes 4 different jobs. And so we have a very consumer-like experience for those workers, so they can take Gig Wage with them from job to job and task to task. They're independent. They need to be able to control how they get paid and when they get paid. We make all those tools available. They need easy access to the 1099 forms and filings. We make all of that available too. And so we've built the most comprehensive financial platform for the gig economy. Again, helping you get money from your customers to your contractors as fast and as flexibly as possible. And for those of you who may be wondering if it's just Uber drivers, it's not. In the US last year, we paid out about $1.4 trillion to upwards of 75 million different people. Some people do it full time, some people do it 50-50, some people do it here and there seasonally. But a lot of people are making a lot of money this way. And the cool thing about it, whether you have to work this way or you want to work this way, it's there for you. And we think the gig economy is the economy. In the next 5 to 10 years, this will be the dominant way that people work, as millennials have taken over the workforce and Gen Z is entering the workforce with vigor. People want to work when they want, how they want, where they want, and you need the technology and infrastructure to do that. And so when CFOs, COOs, CTOs come to Gig Wage to automate this process, we're happy to meet them where they are, via web, via SDK, via API, and then also make sure that they have all the tools they need to recruit and retain world-class independent contractor talent. I think I literally just got a lead while this was happening via LinkedIn of a healthcare company that's built on top of the gig economy, and they're looking to automate payments, right? And so we work across many sectors: transportation, healthcare, education, et cetera. It's a very agnostic platform. For every W-2 job, there is the equivalent 1099 job. If you're wondering what type. We pay Santa Clauses, we pay doctors, we pay nurses. It's a really massive opportunity, and there is no standardized technology for it. And that's what Gig Wage exists to do. We're super excited. As far as, we do everything. We do payments, we do compliance, we do taxes. It's B2B, it's B2C. And so I'm super excited to talk to everybody that's on this call, because we are trying to build complete financial infrastructure, like from the bottom up, for this massive audience. And so it takes everything: banks, financial partners, tax partners, and so on. So looking forward to kind of answering some questions and chatting with you guys later on.
Thanks, Craig. When you say Santa Claus is plural, are you suggesting that there is more than one Santa Claus?
Well, if I told you that I couldn't, I'd probably they'd kill me. So is it one? Is it multiple? We don't know. Who knows?
Thank you, Craig. So as you can see, we have taken down the slides for the second portion of our roundtable discussion. You will notice I did not use the word panel discussion, but rather roundtable, because I really want this to be a conversation, an opportunity for you to ask your questions face to face. Of our founders while we have them on the phone. I've prepared a couple of questions to get us started and get us sort of thinking about what partnerships could look like, but I'm not afraid of awkward silence if we get through all of my questions, and we need to just pause to let you all come up with some follow-up questions you want to ask. So to get us started thinking about partnerships, I want to start with a few examples of what partnerships could look like. Whether it's FHN between portfolio companies and FHN member organizations. This could look like a fintech helping a large financial institution reach customers that may be hard to reach otherwise. This could look like deploying philanthropic capital more efficiently through a fintech company. This could look like, in the context of many of the companies we have today, supporting small business employers to support the financial health of their employees. But that's just a couple of different ways that folks might partner with these different fintech companies. To give some more tangible examples, I first want to turn to Saran to share about a partnership that's been particularly fruitful for Mirza as you think about scaling both financial health impact and your business.
Yeah. So one of the coolest opportunities we have is with a large staffing agency called Adecco. They're one of the largest staffing agencies in the world, and you might have seen them referenced on one of my slides, where we started working with both their employees and their clients' employees in one of the largest distribution centers in North Carolina. What's been really cool with Adecco as an example is that they have been struggling to identify childcare benefits that they can actually use for their workers. In part, both for Adecco, that staffer models are not well suited to an on-site childcare sort of model, and for their clients that have large hourly workforces, being able to spend on childcare is just out of the question. But they are very aware that childcare is one of the top reasons that they have absenteeism or folks call out. So we partnered together to test how we could work in a distribution center environment. So over the course of a month, we were able to get close to 80% of eligible employees using our product. This meant making sure that we're screening folks to figure out who's eligible for childcare subsidies. And the companies are paying Mirza a SaaS fee. And in return, we're then helping their employees get access to depending on where you live, $6,000 a year in childcare subsidy in some parts of North Carolina, through to $10,000 more per child. And what's been really exciting is that we've had employees who were parents and worked different shifts so that they could have one parent at home with their child, now be able to work the same shift during the day and actually have dinner at home together and be able to then both take care of their financial health, take care of their families, and also make sure their child is in a really safe, wonderful childcare, and get some time together. And I think that sort of human story that makes it so real in the work that we do, because the result is not only better better economic outcomes and better attendance and so on for the company, it's also very real for what a family can experience together.
Totally, totally. Yep, not just about cost savings, but also, yeah, time spent with your loved ones, right? You said 80% of eligible families were enrolled in childcare in 1 month through this partnership?
You started using Mirza in 1 month.
Started using Mirza. Wow. Wow. How are you able to get such a high uptake?
So what's been really cool is that we've used this as a way to learn how we drive uptake. We usually get roughly between 25 to 35% uptake among eligible employees, which is still about double what is a traditional wellness benefit through digital only communications. What we were able to test out is for a large site where we can reach folks in one single place, what's a way of driving awareness that digital mechanisms may not work in? So that was really part of it. Our team was on site for 3 days, an initial week. We leveraged, very much thanks to the resilience team, some ideas on Mirza ambassadors to help be able to then have those early adopter employees spread the word to their friends. And we also figured out what are the things that really attract the parents to come and talk to us and have the best use of our time. So we gave away a lot of coloring books, but it's definitely a fantastic way to figure out who the parents are.
That's great. That's great. Thank you, Saran. Any other immediate follow-up questions for Saran? We can also come back to questions. We'll have more time for questions in a little bit. Okay, I'm going to move us forward for now, but I will pause for more awkward silence at longer intervals later. Elizabeth, I would love to hear about an example of a partnership that has been particularly valuable for OS benefits as well as the partner.
Yeah. So similar to Saran, we've recently launched our health insurance as of May. And so a big initiative of ours, as I kind of alluded to earlier, with having so many independent restaurants around coast to coast, it's really hard to get in front a lot of those one at a time from a sales strategy. So one thing that we're really leaning on is working with organizations that are representing the hospitality industry. So for example, a great one for us is the Independent Restaurant Coalition that came out of COVID. They're doing a lot of work to really support and advocate on behalf of the hospitality industry. So we have a partnership with them, a tier partnership that is really helping us educate their community and driving awareness to OS benefits through multiple different channels. This includes like in-person events, digital town halls, and a lot of education. I think also to Saran's point, one thing that as much as digital is obviously we're remote, we're small, we're lean, being remote is part of it. And then as that we default to digital worlds. But I think that's going to be something as we go into next year is evaluating in person. But I think those kind of partnerships for us, like we're looking at network effects. So we obviously have the Independent Restaurant Coalition. We're talking to several other organizations that represent on the restaurant industry. But there's also for us, the next phase is broker networks, things like that because we definitely want to find our way into having exposure. I think those are the two that are come top of mind right now.
Yeah, that's really helpful. So yeah, thinking about ways that you can tap into large networks of small businesses so that you can reach a lot.
I think too, now we know a lot about like the messy middle where it takes so many touch points in order to expose, to create that kind of conversion. So for us, it's much more of having a reliable partner to be able to drum that.
Yeah, be that advocate. Yeah, that's great. That's great. Any questions for Elizabeth on this partnership? Okay. I want to spend a little bit of time thinking about forward-looking partnerships now that we've given a few examples of what partnerships could look like, to sort of be generative in thinking about what potential partnerships might look like in the future. And to do that, I was thinking we might start by just asking our founders what it is they're looking for in future partnerships as they think about scaling both their business and financial health. So to start, Avi, I wanted to call on you and see if you wanted to share what are you looking for? What do you need from our network members?
Sure. Well, in order to reach all these employees, we have to work with their employers. Employers are busy. They're getting, kind of constantly emailed and LinkedIn, different kinds of vendors and so on. So working through a trusted channel is a great way to get us in front of employers and get our products into the wallets of employees. So what I mean by that is wherever folks are talking to lots of small businesses, like in Spark, for example, or even at the branch level, that's very helpful to sort of to say, hey, you might not have known on your list of compliance and regulatory things that you've got a commuter benefit mandate in your city, or where you have one of your locations or all of your locations. Here's a vendor that's not out of pocket and is going to put money in your employees' pockets and is sort of built for your workforce. And that's where we just find most of our client growth. It just comes in through referral partners and word of mouth because we're well fit to a particular channel. So we love any place that's talking to small businesses with a lot of credibility and authenticity. And I would maybe add to that in a totally different way. We think a lot about Community Reinvestment Act dollars and better ways to deploy them that aren't perhaps building real estate. And I think for a lot of the founders here, we're putting dollars into the pockets of verifiably low-income folks in sort of census tracts of interest for those programs. And that's often not a thing that founders get to spend a lot of time kind of thinking about and strategizing around, and any help there is obviously super helpful. So where you talk to small businesses and where dollars come from that help employees who need them.
That's great. Thank you, Avi. Any follow-up questions or thoughts or ideas percolating that folks are interested in sharing? Feel free to drop it in the chat if you don't want to come off mute. But I'll keep us moving along because I'd love to hear from other founders as well. So Craig, how about you? What are you looking for in future partnerships?
Yeah, no, thanks again. I still don't see all those LinkedIn invites, so I'm still waiting on those patiently, but it's all good. No, so I think when I think about this group specifically, the financial services and banking institutions, for us, we've built GigWage in a way that it is easily consumable via API. It's embeddable, it's brandable. People can kind of consume our experience. So for us, I think what would be interesting to a lot of the people on the call that we'd love to have some conversation is the traditional, how does the startup that's innovating connect with the larger player who has distribution, and how do we bring innovation to them and they bring distribution to us? It's kind of like always this race. Can the distributors get the innovation before the innovators get to distribution? I'd love to partner with organizations to embed our innovation into your distribution. So think if you're a bank and you're already providing business services to the banks. Banks have been partnering with payroll companies since, I want to say Bank of America and ADP did it back in 1995, and banks provide payroll services, but they don't have this unique payroll offering for the gig economy, which is growing at a much faster pace. So we'd love to embed 1099 payroll services as a part of a business banking offering. And so if you're an actual bank and you provide businesses services, we could be helpful in differentiating. If you're someone like Jack Henry and you provide services to the banks, instead of providing just payment services to them so they could use your payment tools, might as well wrap reporting and insights and workflows around those payments out of the box. So now your banking customers can say, instead of just using ACH, we have a specific use case for ACH to pay, manage, and support, millions and millions of people to help those smaller regional banks differentiate. And then we've got some other stuff, but I think in general, our ability to embed 1099 innovation into the banking ecosystem is something we'd be extremely bullish and excited to have some conversation around. And I'll use one more specific thing. I'm pretty sure somebody from H&R Block is on the call, and I think you guys have a sleepy payroll product that nobody knows about. Everybody knows you do the tax forms, which we could partner with on that too for 1099 filing. But there's a payroll company buried inside of H&R Block that should just be booming with 1099 payroll innovation. So we can talk about that specifically as well too.
Great. Thanks, Craig. I appreciate your calling some folks out specifically to get the conversation started. Tom, what about you? What are you looking for?
Sure. So I think two things. So, at the end of the day, when I think about what my business is trying to, achieve, it's the financial health, and, predominantly, in many cases, it's our end customer, which is contractors, property attorneys, public adjusters, these small business owners. And what I found is that not a lot of them, have business degrees. They didn't go and get, majors in accounting or, work with a financial planner. Actually, a lot of them are ex-veterans who, were serving on the front line. Some of them are actually convicted felons who, served their time and couldn't get a job anywhere else. So they started a business, and, it benefits me and both them to really help them gain financial literacy. And because when you understand and have good financial literacy, you have a better understanding of why my tools and my suite of products is better. And so, I would say that if there are individuals on this call who are building financial literacy programs, I think that my audience is a really great group of people to take that to, because the more that they're educated, again, like the more attractive my products look. But also, from the selfish entrepreneur side, my LTVs start to look a lot better when they last longer than the 3 to 5 average years that the small business does. And then I guess the other piece that I had in mind as well is that, we've kind of created this wedge into the restoration vertical, and we just launched basically like our digital wallets. And ideally, what I want to do is provide like a verticalized neobank for the restoration professionals. And that will require things like adding payroll, integrating with accounting systems. And I don't want to build H&R Block. I don't want to build the gig 1099 pay worker infrastructure, because a lot of them do have subcontractors that are working for them. And so I think that, outside of, the members here, but, I hear a lot of synergy from even the founders on here of things that I would like to, either now or in the future kind of bring into the fold.
That's great. That's great. Thanks, Tom. Let's see. Saran, what about you? I know you alluded a little bit earlier to future partnerships, but what are you looking for going forward?
Yeah, so very much similar to Avi, we rely on great channels to be able to reach folks who deserve access to subsidy and deserve access to a much better experience. So we partner with companies like Adecco and Best Buy today, and we're keen to speak with any of you who have large frontline hourly workforces. There's a reason only 20% of eligible families are getting access to subsidy. And a large chunk of it is what we see in our users. About half don't even know these exist. And then all the application barriers, they need to call you during your workday. And so we'd love to work with you to remove that as a barrier for your employees. And also for members, I know there are folks on this call who bank so much of the low to moderate income American families. And so where that is a potential to partner to be supporting your members and your users, especially in places like New York or New Mexico, where that's that family of 4 making 100K in New York, or up to 400% of the federal poverty level in New Mexico, close to 200K for that family of 4. That's really, really meaningful, because it's a large swath of the US family base that really should be accessing the support that's out there.
That's great. Thank you, Saran. And Elizabeth, what about you? What are you looking for?
Yeah, I think I agree with Saran and Avi. It's just more of a kind of the network affecting right now, particularly, but I know there was several people on the call that are in banks. You're representing and working with small businesses every day, including the hospitality. And I would like to make a little note that we work with hospitality and the entertainment world. So that includes stadiums, music venues, thinking about being down here in New Orleans. And so that really matters. And I think the trusted kind of word of mouth, social proof, I think matters a lot, particularly when people are trying to look at new technology integration into their business. And I joke that the hospitality industry has an allergy to technology many days because everyone's trying to get in there with like in the wedge, trying to find new ways to get into the tech stack. And we really are trying to centralize ours. So if there's ways, I think that to me is the biggest ask here.
Great. Thank you. What about from our members? As you think about future partnerships or opportunities or things that, partnerships in the past that have worked well with your organizations, do any of our members have reflections to share? Things that have worked well, roadblocks, barriers you anticipate to future partnerships that would be challenging to overcome? I'll hold out. Karen, I see you dropped a question in the chat. Would you like to come off mute and share? I'm also happy to read it. Karen's asking, are any of these fintechs looking to partner with banks or credit unions to offer as a benefits package I'm assuming to to the bank or credit union employees?
I would jump in and say we would love to partner with banks or credit unions, both as a benefits package for employees or members.
Yeah.
I'm sure many of us feel the same.
Same, for sure.
For those, okay, so not employees, but those who offer themselves up as a resource. Got it. Like to their customers, perhaps. Yeah. Huh. They're companies that hold benefits fairs. Okay. So that's an idea that I had not dawned on me. Okay, great. Any other questions or thoughts that folks want to share? All right. Well, I will hand it back to Mark to close us out, but I just wanted to thank all of our founders for giving us an hour of their day. I know that you are busy people, building businesses. So I appreciate the time. And it looks like Vikas may have put his hand up for a question. Okay, his hand is down. If you would like to be connected with any of our founders, reach out to your CSM at FHN, and we are happy to put you in touch with any of these founders. And back to you, Mark.
All right, thanks, MK. Craig, just an update on the LinkedIn count. Do you have a number for us?
It's up and to the right, baby.
All right, sounds good. And that's what it's about, making connections and utilizing this platform for definitely to make those connections and fuel each other, education, everything. We have some upcoming events I'd love to share with you. First up, coming up in our next roundtable will be around upcoming standards to support consumer spending. That is Thursday, January 30th from 12 to 1 Central Time. Invitations will be out very soon, as well as in the FHN newsletters, and you can also reach out to your CSM for more information there. And it's never too early to let you know that registration is open already for Voices of Change, which is Emerge Financial Health 2025 in San Diego. We're looking forward to seeing all of you there and more, June 3rd to 5th. And we'll, and as I said, registration is open. And if you have your membership and you do have codes that come along with that, contact your CSM and they'll help you get acquainted. Thank you today for joining us. Great presentation from everyone. I hope that all of our members found value, and we're going to continue to do this benefit in 2025. Wish you all the best for the holidays and a very happy new year.